OSCR is trending this week after the company pre-announced preliminary financial results that revealed a larger than expected operating loss, reigniting debate about whether the stock's recent drop is a temporary setback or a sign of deeper structural problems. In its early look at quarterly results, Oscar disclosed that while revenue continues to grow at a healthy pace, thanks largely to higher membership numbers and strong premium collections, the company is still struggling to translate top line growth into profitability. The significant loss from operations has prompted management to revise its full year guidance, which some see as a red flag that costs, particularly medical claims expenses and marketing spend, remain stubbornly high relative to revenue. The community reaction is split. On one side, bullish investors argue that Oscar's continued revenue growth shows robust demand for its tech enabled insurance model, and they believe the company can eventually scale into profitability as it expands its footprint and refines its cost controls. They also point to potential tailwinds from continued ACA subsidies, which could sustain enrollment growth and stabilize risk pools. On the other hand, skeptics warn that Oscar's persistent losses highlight the difficulty of disrupting the health insurance industry, where legacy players like UnitedHealth and Centene benefit from scale, diversified product lines, and more predictable margins. They argue that if Oscar cannot meaningfully cut its medical loss ratio and administrative costs soon, it may face pressure to raise more capital, further diluting shareholders. Adding to the uncertainty, broader market sentiment toward healthcare stocks has weakened, with investors becoming more cautious about companies that are still in heavy growth mode but lack clear paths to profitability. Concerns about potential changes to ACA subsidies, reimbursement rates, and regulatory frameworks are also weighing on investor confidence. As a result, Oscar's upcoming earnings call and detailed guidance update are shaping up to be critical for both sides. Bulls will be watching for signs of improving cost discipline, while bears will look for any hints that losses could widen further if membership growth slows or medical costs spike. For now, the community remains divided. Is this an opportunity to buy a high growth insurtech player at a steep discount? Or is this the start of a longer slide for a company that can't outrun its expenses? Either way, all eyes are on the next quarter to see whether Oscar's vision for modernizing health insurance can deliver real profits, not just revenue growth.
Okay, this is Tuesday, the 22nd of July. The stock on the pre-market session, it's been swinging between 14.75 and 12.21 in this pre-market session. It's up slightly 2.06%. Let's see what's going on. Yeah, so this is the 4-hour chart. The extrapolation is for higher prices. Even the 10 and 21 period moving averages are extrapolating strength to continue to build from now till Thursday, the 31st. In terms of projections, we don't have, okay, we have some here: 10.15, 10.93, 12.21. We have been able to compute some ourselves. They are much more ambitious. 17.35, 23.34, 40.55, 18.91, 25.01, 44.97, 20 points, yeah, 33.40. Yeah, yeah. So let's see now. Let's have a look at the. Okay, before we do that, the momentum on the 10 and 21 period moving averages, I can imagine they are okay. They're not that strong. Not strong at all. Okay, okay. Well, the 10 period moving average is in strong in a trend mode. However, the derivatives are seriously negative, indicating that yeah, it's either improving or it's not looking good. It's that it's either that the momentum will continue to improve, as it was bad before, or that right now the little momentum it has picked up will dissipate. For the 21 period moving average, everything is negative. So right now they're still in the woods as regards the 21 period moving average. Well, I can see here it's not improving; it's decaying. The momentum on the 10 period moving average is indicating so. Short sellers and sellers have selling pressures is prevailing as things stand right now. Let's have a look. Yeah, yeah. Not a lot of strength. 2.2. Yeah. Okay, let's have a look at the daily chart. It's really not going to be. It's not active at the moment, but we could just see what's going on. So okay, let's not read a lot of meaning into this extrapolation, but let's see what the projection is saying. 17.35, we have that as well. 17.35, yeah, we have that projection. So in terms of price pressure momentum, everything is also negative here. So this is a seller's market. Short sellers win in this case. They have the upper hand in this market for OSCR. Yeah, especially based on what happened up till yesterday, the 21st. So this is what's going on. The company, yeah, the company announced its earnings outcomes. I think, yeah. Let's see now. Preliminary Q2 loss. Okay, yeah. So that was what that reader was saying. Okay, so just see what you make of OSCR, and I'll keep updating you. Thank you very much for watching this video.